Hello guys, welcome back to my YouTube channel. So in this video, I'm going to explain how I lost 25k over the last 3 years, £25,000, and also why I prefer to stick with buying gold now. So it all started with step one. I think this was when I was 18. I got given £9,000 in maintenance loan because I started uni, and I invested 9k into a trading account app called Trading 212, where you can buy and sell stocks and you can buy shares and you get dividend payments. But I was primarily using it for trading. And what happened next was I made a lot of profitable trades that brought my account up to 11k. So initially I was in 2k profit. Started with 9k and went up to 11k. But then I made a big loss with the stock, and on one trade I lost 4k because the company for some reason just went really down in one day. I don't understand why, but it's very risky to buy stocks, to trade stocks, because any stock can go to zero any moment. So after that I decided to quit trading stocks because clearly it wasn't for me, and I decided to give crypto a go, try to do the crypto thing, because I've been seeing a lot of videos about crypto, so I was influenced by YouTube videos to buy crypto. So then after that, I got given another 9k for a maintenance loan, and then I had 4k left. I had 5k left after losing, making a big loss, and then number 6, I got given another 9k maintenance loan, and I also got given another 2k from an injury claim that I claimed, and I also got 2k from US stimulus, because during COVID, the US government gave out stimulus to all US citizens. Because I'm a US citizen, I got given 2k, roughly 2k. It wasn't exactly 2k, slightly more, but so I ended up getting, and that brought me up to 19,000 pound, and so I went from 5k to 19,000 pound just because I got given money. I got lucky kind of. But so I then made a few profitable crypto trades on a crypto app called I used a few different crypto apps actually. I used an app called crypto.com. I used an app called Hotbit. I used an app called Binance. I used Coinbase. I used a lot of different crypto apps, mainly to transfer and stuff. So I started to use margin to trade crypto, which was the biggest mistake I ever made, because I'm not sure if you know how margin works, but basically they use your account as collateral for a loan. So they give you a loan to trade with, but they use your account as collateral, which means that you can make much more profit, but you can also lose money faster if it goes in the wrong direction. So I started using margin to trade cryptocurrencies, and I actually managed to get my account up to 30k. I went up 11k using margin, and this was successful in the meantime. But what happened next was dreadful. On step 9, I ended up losing £25,000 trading a crypto called Luna, which I'm not sure if you've heard of this cryptocurrency called Luna, but I think last year it went to zero. Like literally it went to literally zero. But I managed to sell before it went to zero, so I lost £25,000, and I only had £5,000 left after that. With that £5,000, I ended up buying gold because I was looking for a more safe haven asset, which is gold, and also silver. So ever since then I've been accumulating gold and silver, and now my gold is now worth my gold and silver together or combined are worth 10k. So over the years I lost about 25k. But the main lesson I learned from this is: lesson 1, trading is highly risky. Lesson 2, don't try to time the market, because it's hard to time the market, because when you might buy, the whole point of trading is to buy low and sell high. That's the whole point of trading. But it's impossible to know whether you're buying a low or whether you're buying a high. 'Cause sometimes what might look like a low may go lower, and what may look high may go higher. So with trading, there's a lot of emotions involved. There's a lot of FOMO, fear of missing out, and there's two emotions when you trade. There's greed and there's fear. Both of them are extremes that lead to big losses. Greed and fear, and it's natural human instincts to have greed and fear. But with trading, you have to turn those emotions off to not be influenced by them. You have to trade based on these signals. Lesson 3 is, if you don't hold it, you don't own it. So with the gold, I can actually hold it in my hand. See here? I can hold the gold in my hand, which I know I own it. With crypto and stocks, you can't actually hold it in your hand. It's just on some type of app or on some type of platform, which is not in your hands directly. It's in the hands of whoever's holding it, whoever's looking after it for you, the crypto exchange or even the stock platform that you're trading with. Even if you manage to put your crypto in a wallet, the crypto is not actually in the wallet. The wallet is just a key to open the crypto wallet, which is based on some computer storage somewhere else in the world. So even with crypto, you don't even own your own crypto. It's not with you. It's somewhere else in the world. So that's why I stick to buying gold now, because gold is guaranteed to go up in the long run every year. Whereas crypto isn't guaranteed to go up. It could go up, but it could also go down equally. There's an equal chance of both happening. But with stocks are less risky than crypto. But with stocks, they're also heavily manipulated by the big traders and the market. So I hope you learned some lessons from this video. If you did, please hit the like button and the subscribe button, and I'll see you in the next video.